bear with me. Before we get started, please take a moment to take a look at the risk disclaimer, all right, which should now be on your screen. If you're watching the recording, please take a moment to pause the recording, carefully look over the risk disclaimer, and then we'll get started. All right, so we are going to run through the majors, the crosses, maybe an exotic, and some indices, and then maybe gold and oil as well. So if you have questions and want me to cover particular pairs, by all means, please put it in the box. I'll be happy to do so. If you need me to go back and take a closer look at something on a different time frame, please let me know. And if I miss a pair, a commodity, an indice, or something that you want me to cover, by all means, you know that as well. Be happy to cover everything and anything that you guys have for me to look at. So let's start with the world's most popular pair, the euro dollar. This is the 4-hour chart of the euro dollar. Still looks it actually looks fairly bullish to me right here. All right, we did again reject off of this horizontal resistance around 134. All right, you can see here we pushed down lower, here we pushed down lower. This range basically between 134 and 134.50 has been pretty good. But the one thing that you do want to note is we are continuing to make higher highs. All right, so we have a higher high between this peak here and this peak here. And then we have another higher high between this peak here and this peak here. All right, so we are making progressively higher highs. Right now, it looks like an ascending triangle, although a very squinched one. But what that means to me is that the market is trying to build up momentum for a squeeze and a break above 134. All right, this is kind of this top trend line there. So keep your eye on this ascending wedge type thing as well. But I do really like higher highs, all right, higher lows on either side, and we're pressing into 134. Major support comes in here at this 100-day EMA, 100-period EMA, sorry, on the 4-hour chart. That's 133.11. The 50 has also been there, 133.44, and then the big one is this 200. That's at 132.53. One scenario I do still like, if you're not currently long euro, if we do fall down towards 132, I think 132 would be an excellent buying opportunity. But if we don't fall back to 132, I'll be looking for a solid close here above this highest resistance level for an eventual move back up towards 137.10. All right, these previous highs back here. We'll see if we can manage to pull that off, but euro does look primed to continue marching higher to me. All right, so that's the euro. Let's go to the pound. Pound, on the other hand, looks somewhat bearish right now, or at least it looks like the next 60 or so pips are likely to be bearish. I'm basically looking for the pound to weaken here at the beginning of the week down towards about 155, which is the 100-period EMA here on the 4-hour chart, and it's also this descending trend line. All right, and from that descending trend line, looking for a bounce up towards around 162. We did break out of this ascending wedge here, which I mentioned, I think, in last week's webinar as a bearish reversal pattern. We did break out of it. We headed lower, but we're about to encounter some significant support around 155, and so far the sell-off hasn't been overly dramatic. So I'm inclined to think that support level will hold on the first test and provide a nice entry for longs right around 155. Aussie dollar. Okay, this is basically how Aussie dollar is setting up. Above 93 still opens up 97. Above 92 opens up above 93. And below this trend line here opens up new lows. So basically below 89.40 opens up a move below 88.40, another 100 pips lower. Aussie dollar tough to trade right now. You could try to fade it at 92, playing the top side of this resistance, or you could get long near market with a stop below these lows and hoping for a breakout. in my opinion, there are clearer pairs to trade than Aussie dollar, and I will likely be focusing more on those this week, rather than trying to figure out exactly what it is that the Aussie is doing. Some significant moving average resistance at 91.35. That is the 200 period EMA here on the 4-hour chart. We broke above it once, but couldn't sustain, so we'll see how we treat it on the second test. But above 93, and I really like Aussie for longs, but before that, I'm a little bit hesitant to get involved. Kiwi, on the other hand, I like Kiwi longs here at the beginning of the week, close to 77.99, so 78. Stops below these lows at 77.55. For a move up towards basically 80 or so, maybe 79.75. We have some significant resistance in that area. All right, these are all 3 key 4-hour moving averages, 50, 100, 200, all sitting right around 79.30. And right up there we have that trend line retest at around 80, as well as 50% fib. And then I suspect we continue on lower. The reason I think that we're heading lower is this, again, 50% fib test here, suggesting that new lows are in the offing. We just haven't quite gotten there yet, so I'm looking for opportunities to fade rallies on Kiwi. Maybe even play one of those rallies for a nice about 130 or so pip gain here early in the week before flipping and seeing if we can get a sharp sell-off here on Kiwi. Dollar CAD. All right, so we had a very interesting development for dollar CAD, basically straight up, which again kind of matches what we've been seeing straight up here, pretty straight up here, and then a rollover. So we may be seeing the rollover here. The first major support is 1045, so 104.55 basically. That is the 38.2% fib. There's also this horizontal, key horizontal level here marked in red. That would be a nice opportunity to take some low risk longs, all right, for a move back up towards new highs above 106.50. We'll see exactly how we treat that. Moving averages, flipping back into a bullish configuration here on the 4-hour chart. So dollar CAD does look constructive, though it does look like we could see a little bit more of a pullback here at the beginning of the week before higher. Dollar Swiss franc trading at support just above 91.50, basically 92. We have this horizontal level here marked in red. All right, you can see we've held there once, twice, 3 times, basically 4, now 5 times. And we also have this ascending trend line that, other than this brief dip below, we've traded pretty well off of. So dollar Swiss is at support, looks primed for a move higher. Support ranges down to about 91.30, 91.50 or so. So those would be the levels to keep your eye on the Swiss franc. This is the sharp descending trend line that a break above starts to trigger a move higher. Back up towards the top of the range around 98. So that is something to keep in mind for you if you are a longer term trader. We are basically in a range between 90 and 98, so an 800 pip range, and we are about 200 pips off the bottom of that range, which gives you 200 pip risk or a 600 pip gain, so about 3 to 1 if you want to start looking longer term longs for a move back towards 98. And really, 92 isn't the bottom of the recent range. The bottom of the recent range is 91.50 or so, so that's even a better risk-reward ratio if you're willing to sit and hold it, kind of go longer from there. Yen crosses we will get to very shortly. Let me run through the Swiss crosses. Not all the Swiss crosses, just the ones that I like. Pound Swiss, I like. All right, we have a nice breakout here. We are now retracing. We are at a major 50% fib, and that 618% fib corresponds very nicely with a retest. All right, so a couple options here. We rally from this 50% fib. We dive a little deeper, test this 618 and that trendline retest before rallying to new highs, or we fall hard from here. But I really prefer the 2 longs, the long setups for about 147 to 148 as targets. So again, another Swiss pair that looks relatively bullish to me. Aussie Swiss. it doesn't look necessarily bullish right now, but it has clear bullish potential. All right, we have a potential double bottom here on the 4-hour chart. So if we can start to rally a bit from here above 86 would be huge. If we can break above 86, that opens up a move, measured move to about 89, 89.50 or so. All right, so 350 pip move above 86. Couple options. You can wait for that break above 86, or you can start buying into smaller positions down here to improve your average price if and when we do break 86. Stops would be a new low. All right, we should hold this double bottom. If we don't, it wasn't a true double bottom, and all bets are off. We'll have to look for a new scenario. But Aussie Swiss double bottom potential, 82 basically would be your stops. About 120 pips. Again, a lot higher risk than I prefer on my trades. I try to keep my stops around 40 pips max. But if you are a long-term trader, again, the risk-reward ratio for long Aussie Swiss here is actually pretty phenomenal. So that's another setup to keep in mind depending on your trading style. I don't think I really like any of the other Swiss pairs. I don't like CAD Swiss at all. Euro Swiss, I don't really trade Euro Swiss. I'll start to trade Euro Swiss if we get back down to 121.50. I'll start to buy it there. But we are at a just a little bit above some significant trend line support on Euro Swiss. If that is a pair that you are interested in trading, more power to you. There's a setup to keep in mind if you have the patience for it. Euro Pound, not a very clear setup on Euro Pound. All right, we broke back above. I still like Euro Pound to the downside, but we might have a little bit more upside to run before we get there. All right, let's assume that this is an impulse move lower. 50% comes in at about 86.36, so we could see sort of a false squeeze higher up into that 86.36 to 86.50 range before a hard sell-off lower. We'll see. I generally like to be more bullish the pound than any other currencies, so definitely looking for Euro Pound for shorting opportunities, but right now it's a little unclear. You may continue to see a little bit of a squeeze higher. Dustin, all right, I'll jump back to Kiwi real quick. We're at support right now. I like it for a move up towards about 79.50 to 80 or so. And then from there, I'm going to like it to flip it and look for a move lower to new lows below 76.80. On the daily chart, all right, I actually need to go to a weekly chart. All right, this would be our next stop. These lows down here, that's about 74.46. So that's where you want to keep your eye out for Kiwi shorts if we do flip. Again, I do like it higher in the beginning of the week. And then I would look for around 79, 30 to 80 would be a place where I'd look to flip short. Let's go real quick to the yen pairs. Okay, this is dollar yen. This is pretty much unchanged from last week. It remains true right now. Two very different opportunities here on dollar yen, so you can pick your poison. If we do break out, I do very much like it to the upside. We would need to basically clear 99.30 or so, all right, and then it looks good for a rally back up towards 102 and then even towards 103.70. On the other hand, should we break these lows around 98.31, I'll move down to the bottom of this triangle at 97, seems likely, and from there we could either bounce or continue to break down. Daily chart, just zoom out real quick. All right, that's basically what we're looking at. We're still trading in that triangle. We're looking for a breakout one way or another. This is DK. All right, one of the reasons I do actually prefer yen pairs to the downside is the Nikkei does look like it's starting to try to break down here. But the last couple of days have been pretty bullish. You can see we squeeze back into this triangle. So we'll see how the Nikkei handles it. If this turns into a false break and we see the Nikkei move higher, yen pairs are going to follow it. So keep your eye on that as well. Aussie yen, I still like to the downside, but I think we have a little bit of room back up to the upside still. Looking for now about 90, 950 to be the level to watch on Aussie yen. It's the 50-day EMA, and it's a retest of this bearish breakout level. All right, so that's about 90.50 to 90.75 would be the range for Aussie yen. I like that very much to the downside. Kiwi yen, all right, it's kind of goofing around here, down by support. Move below this 200-day EMA here in tan would be huge. So basically below 76, and we could start to see a very strong move lower on Kiwi yen. But we do need this 200-day EMA to break. I've highlighted twice where it's held, and now we're sitting on it a third time. So definitely keep your eye on Kiwi yen. Pound CAD. Yeah, I was looking at Pound CAD earlier today when I was preparing for the webinar. Give me 2 seconds to finish the yen pairs. We'll go to Pound CAD next. There's a couple different setups in Pound CAD. One of them is the one that you were talking about. Pound yen. All right, breakout. Pound yen probably the clearest right now. Basically, buy pound yen on a retest of this trend line. Let me go to the 4-hour chart. Daily chart's been screwed up. All right, so 153. So if we do sell off here in the beginning of the week, right around 153 down to maybe 152.75, could be a very nice opportunity to get long pound yen. Could be a false break. Obviously, none of the other yen pairs have really followed that breakout yet. So we'll see if pound yen is the leader or the liar. But certainly, from a technical perspective, 153 is a terrific opportunity to start shorting some yen against the pound, or buying pound yen. CAD yen is a little bit goofy too. It's been sort of dipping in and out of this ascending trend line. Right now it's testing some moving average resistance and trend line resistance. Ideally, I guess, we see a triangle break and then a break of 92. That moves us down to about 86 for the measured move of this potential head and shoulders. So CAD yen has a lot of downside, especially if we can clear 92. Swiss yen, I don't like it, but it's testing resistance right now. Take that for what you want. And I think that's all the major yen pairs. So let's do pound CAD and take a look at. All right, so here's the one thing I want to point out about pound CAD. This daily candle, all right, that is a monster bearish candle. All right, so you want to be very careful about that. That's about as clear as a single candle reversal signal as you're ever going to get. It really could not be any better. So keep that in mind with pound CAD. But let's take a look here at the longer term pound CAD. All right, this is the weekly chart. You can see how much resistance. All right, we couldn't quite close above, dating back to 2010. All right, so we failed to break this horizontal level, this particular horizontal level, and we also failed to break the 200-week EMA. We rallied right up into it, we broke above it, and then fell back down with that nasty daily candle on Friday. So I'm a little bit wary about shorting or about buying pound CAD because we may start to see a stronger move to the downside. But this level, about 162, so about 130 pips lower, has some pretty terrific horizontal support. We tested it in May of 2012, October of 2012, December of 2012, June of 2013, then on August of 2013, then we broke above it. So very possible that we do see, all right, about 130 pip move lower, followed by a stronger breakout. So that's about 162 would be the level that I'd be looking at pound CAD for the potential to try and get long. Again, this daily candle makes me nervous. And again, for those of you who don't know, pound CAD is far and away my least favorite pair. Although Aussie Kiwi is making a rally for that position. So I'm not a huge fan of trading pound CAD, but 162 would be an excellent opportunity to start nibbling on some longs for a potential monster move higher. Again, like I said, I'm bullish the pound more than I am any other currency. So that certainly fits with my fundamental perspective. So definitely beginning the week, keeping your eye right around between 162 and 162.40 would be a good opportunity perhaps to get long some pound CAD. Yeah, it is a big range. Let's see if we can find a monthly. So this is the monthly chart of pound CAD, all right? So another reason why I'm a little bit hesitant uh, is we tested the top of the range, and the bottom of the range is basically about 1.52, so about 1,000 pips lower. So if this isn't the start of a major breakout, we're likely to return down towards that 152 level. Chart's pretty bearish longer term. But again, like I said, the fundamentals starting to line up in favor of the pound for the first time in a long time. Some more positive data coming out of there than really anywhere else. So definitely pound CAD at 162 would be a nice opportunity to at least take a shot. You might get stopped out, but also might open up a move up towards really 179. All right, 180 even. So that's definitely a pair that you want to keep your eye on if you're willing to endure the pain that can be associated with trading it. No problem. Glad you found it useful. All right. Aussie CAD, Kiwi CAD. Let's run through the rest of the CAD crosses. Aussie CAD trading in a range between 95.30 and 93.70. So just play that range until it breaks. Kiwi CAD, much more tricky. 81 would be a buying opportunity. All right, should we see a move towards 81? You could try to get long here on this trend line for a move up towards 84.50. Other than that, just kind of leaving Kiwi CAD B for now. It's trading this range pretty well, so you can play that range as well. EuroCAD, all right, another breakout opportunity to get long at 139.06 on a pullback, so somewhat similar to pound CAD. It's 139.06 to be able to watch there. Did the yens? This is a major. Oh, the commodity crosses. All right, Euro Aussie potential double top forming on Euro Aussie, matching that potential double bottom on Aussie Swiss. The breakdown here would be below 144, and that opens up a major move lower. That would be a breach of these previous lows and a breach of the 200 period EMA on the 4-hour chart and a breach of this trend line. So 144 is the magic level. You can play that the same way. You can wait for the break of 144, or you can improve your price average by taking some small shorts up here with a stop at new highs and see if the double top potential does indeed play out. Pound Aussie is actually preferred, in my opinion. All right, we have seemed to be putting in some sort of longer-term ascending wedge. These are bearish reversal patterns. They can take forever to break down, but when they do, the reward is usually worth it. So this is how I'm looking for it to play out right now. Basically, 172.15 is the ideal level on a retest for a stronger move lower. But watch that wedge, wait for it to break, and play it from there. Euro Kiwi, it's kind of just like tricky here. You could just fade it here and hope that this range holds, but that's kind of a risky play. It's not particularly clear to me. And then pound Kiwi's in a similar position, all right? Really, you could try to look to get long pound Kiwi at about 196.55. There's some nice moving average and trend line support there. I still do anticipate new highs for pound Kiwi. Actually, we got those highs. But we'll daily trades messed up. So we'll see exactly how this plays out. Potential inverse head and shoulders forming on pound Kiwi. All right, so another pound pair showing potential for a reversal, a very strong bullish weekly candle that you want to keep that in mind on pound Kiwi as well. Cup and handle, yeah. Down here, this would be your cup, and now we are looking like we're breaking out of the handle. All right, I look at it as like an inverse head and shoulders, but Jason is correct in calling it a cup and handle. This is the cup, all right, and then you get some sort of flag as a handle. Then you see the breakout, and it's usually a very, very, very strong move higher. I think I agree that that is what's going on in pound kiwi right now. I've been bullish this pair forever, but now it's finally starting to pick up a little bit. We held a percent fib very nicely, suggesting at least a move up towards about 2.1, 2.15. So strong bullish potential in pound kiwi. It's again just another really challenging pair to trade though. A lot of volatility. The last thing that I really want to look at before I encourage you to ask whatever questions you may have is mini futures. All right, so ESF/ES, however you want to call it, S&P 500 futures. We have a left shoulder, we have a head. That head is a smaller head and shoulders, which is always a good sign. Now we have rallied off this 100-day EMA above the 50. I'm expecting a move higher towards about 1670, all right, which is a retest of this neckline, and it's also, all right, just above some 4-hour moving average support. So looking for a retest of this neckline. Another fall down, all right, to test this trend line at about 1635. A rally back up to make a left shoulder, then eventual breakdown before another rally starting at about 1550, 1525. Maybe even as low as 1500. That's a scenario I anticipate playing out. Obviously, that could change tomorrow. If we break this head, that changes everything. But that, to me, is the setup that I'm looking for on E-minis for the foreseeable future. We'll play that until it breaks down, and then we'll have to come up with a new scenario. All right. Any questions, pairs that I didn't do that you want me to take a look at? Favorite setup of the week? It's a good question. It's probably this Aussie Swiss pound Swiss. All right, but I'm also a really big fan of the pound dollar long at 155. Those are probably my three favorites. And it's rare that I don't trade Swiss pairs very often. I hate them. But those two setups are very attractive to me from a fundamental and technical perspective. So pound Swiss, Aussie Swiss, and pound CAD are my three favorites. Aussie dollar is my least favorite. Dollar CAD is also up there on my least favorite. 1045, nice opportunity perhaps to get long. Some previous horizontal resistance, 38.2% fib. Pretty close to the 50-period EMA here on the 4-hour chart. We may see a fallback there towards there before new highs. But we also could very easily see CAD strengthen a little bit more down towards this trend line at around 103.67 before higher. If we do get down towards 103.70 or so, I'll be very much looking to get long dollar CAD. Whether or not I get long here at 1045 will kind of depend on the reaction that we get when we get down there. But if we do fall down far enough to test that major trend line at around 103.75 to 104, very much then would like dollar CAD to the upside. Other requests? All right, thank you guys. Hopefully the recording worked this time. I'm not entirely sure what I did last time. And if it did, I'll certainly have the recording up as soon as possible, so keep an eye on Twitter feed, Facebook page for that. And thank you very much for joining me. I appreciate you guys spending some of your Sunday with me. Hope it was useful. Enjoy trading this week. Good luck, and I'll talk to you soon.